Have a listen to this. Have a listen to this.
Now, that kind of talk this week dragged Australia's share market to a two-year low. There are, of course, complex reasons for that.
He was the big spender. The big spender.
Doing the grocery shopping could take a huge chunk out of the family budget.
And that's finance.
Hello and welcome to Comedian versus Economist. My name's Adam and we're joined, as always, by my little older brother and real-life economist, Thomas. Hi, Thomas. How you doing?
Yeah, g'day, Adam. How we going?
I'm doing very well, thank you. Hey, we'd love it if you shared CVE with someone. So next time someone asks, hey, you got any leads on some cheap eggs? Tell them no, eggs are expensive everywhere. But I can recommend a cracking economics podcast and then tell them about CVE. But we've got a bit of housekeeping to get started with. We had some emails coming in. There was a couple of episodes ago, Thomas, we were talking about musical instruments and Kawasaki. You said Kawasaki made musical instruments. I called you a dirty liar and said they absolutely don't. Stephen wrote in just to say, hey, just to clear things up, Kawasaki do make musical instruments, and then wondered if I would apologise to you for calling you a dirty liar.
Yes, thank you, Stephen.
The answer is no. I'm not going to apologise. That will never happen.
Classic.
But also, I'm calling bullshit on Kawasaki making musical instruments because the only one I can find is the Kawasaki musical keyboard with piano, organ and other instruments available on Amazon, which appears to be a children's toy. And I think they may have, if anything, just ripped off the name of the good people of Kawasaki. I don't know. That's the only instrument I can find. Feel free to shoot us another email, cve@equitymates.com, if there is, in fact, more to the story. We have another email here from Steve. Steve wrote in after we talked about the election, and he said he loved the show. Have to disagree with the Labor swing in Tasmania. Had nothing to do with anti-salmon. Labor did support the industry. He seems to think it shows the minority green activists are having less of an impact. So that's from Steve, who is a local Tassie boy. So thank you, Steve. We've got a massive show to get through, Thomas. As always, we're looking at charts. If you want to follow along, you'll find them on our Instagram, Facebook pages at CVE Podcast, or on the YouTube video, which you might be watching right now. I don't know. But huge show. So let's get in. Sick of your high mortgage payments? Well, good news. We might have a fix for you. Simply call the bank and say, I'd like to pay less, please. And they might just let you. Follow me for more tips. And can you run a company on human will? And can a human write a will on company time? We will explore the former, very much less the latter. And do animals have souls? No, but some people think that they do. We'll talk about that a bit later. But Thomas, first, government bonds are threatening to blow up the world. That's after several James Bonds repeatedly saved the world. The next installment in the 007 franchise is said to be a ripper. What's going on with government bonds?
Battle of the bonds.
Battle of the bonds.
That'll be good.
Just wait till Bond's underwear gets involved and then it's a three-way battle.
It's a lot of talk about bonds at the moment. The US Treasuries, the 30-year Treasuries, the yields tip past 5%, which is seen as like a critical threshold.
Right. What's it? Maybe just can we start with what's a bond?
What's a bond? So the government wants to borrow money. Right. They issue bonds and people pay them, give them money, and then the government pays them an interest, a return. And so that's sort of the interest rate. And it's kind of like it's the yield, they call it yield, but it's sort of like you think about it, the interest rate that they're paying on the bonds, that sets baseline interest rates throughout the economy. So what happens with bonds is important. One, it affects like the interest payments that governments have to make on their debt. But then two, it's sort of like a baseline interest rate. So it does affect interest rates throughout the economy.
Right.
Yeah, so with the 5-year Treasuries tipping past 5%, that raises some alarm bells because it's like, oh well, the US government is going to have to pay more on its debt, and we talked about that last week. They've got a big debt story happening, but it also means that interest rates will start rising for corporations and for everyone, and then that starts to have implications too.
Right.
So that's why we care. That's why we care.
Okay. And so what's the news? What's the scoop?
Well, It's interesting. So yields are up everywhere. So it's not just the US has gone past 5%, but Britain's at 5.5%, the highest since 98. Germany's at 3.1%, highest since the debt crisis in 2010. And Japanese bonds got to 3.2%, which is a new record for them. Yeah, it's kind of up everywhere. So that's a little alarming. And if it keeps going north, then that's gonna have some big implications. But there's kind of two things that are driving it. Like, one is the risk of default. And so we talked about this a bit last week with, the US is paying more on interest payments than they're spending on defense each year at the moment. As yields go up, then they're going to have to pay more. And at some point people go like, well, that's getting risky. They need a return for that risk that they feel like they're taking, and so they'll charge more for they need a higher yield. They need a bigger return because I think that it's now looking like it's more risky. So that's part of the story. But it's also that we've got inflation lifting in some countries. So the UK saw a spike last week in inflation. But the big one, and this is where Albert Edwards at Societe Generale, he's a bit of a perma-bear. He's always like talking doom and gloom. But yeah, so keep that in mind. But he reckons the Japanese bond market's going to blow up the world. Yeah, a little alarmist.
A little alarmist to say it's going to blow up the world.
So inflation is lifting in Japan. So inflation's been a non-story in Japan for close to 30 years.
They've always had deflation, haven't they?
Or yeah, they've been fighting deflation.
Or whatever the negative one is.
Yeah, deflation. Yeah, it's been a non-issue in Japan, and they've been trying to fight off deflation for decades. And they saw a post-COVID spike with the rest of the world. But that's then come off, but is now starting to lift again. So core inflation's now running at 3% and lifting quite sharply in the past 6 months. Edwards is saying that's quite alarming. And the reason why is they've got to unwind their quantitative easing. So you remember during COVID where we had quantitative easing, governments just printing money. The central bank's balance sheets, which gives you a sense of how much money in the systems, they really lifted. So the Fed sort of got towards like 35, 40% of GDP. So lifted from, back in the early 2000s, it was like 3 or 4%. But it got up to 35, 40% through COVID. Japan has been running quantitative easing since 2010, and their central bank balance sheet's at 130% of GDP.
Wow.
So yeah, it's massive.
I mean, I don't understand a lot of what you're saying, but I can tell the difference between those numbers.
That's right. So yeah,
that's significantly higher.
So it's an point. Like Fed printed a lot of money. Everyone's like, "Whoa, Fed's printing heaps of money. That's going to be huge." But Japan's did 5 times the amount that the Fed did.
Just hold my beer. Hold my sake.
Hold my sake. That's right. Yeah. But it's kind of why the central banks like the Fed and the ECB felt that they could, because they'd been watching Japan fight deflation for 15 years through money printing and hadn't really seen any negative consequences. But now Japan's got inflation, and Japanese inflation is now higher than the US and the Euro area for the first time in 30 years.
Yeah, right. And is it trending up? Like, are they talking about it sort of peaking, or are they like, I've heard the term runaway inflation before. Is it running away, or have they got it sort of in check?
It's not runaway yet. It's kind of a good news story. They've got like inflation back in the sort of a 2 to 3% band, but that's good. But it has lifted very sharply in the past couple of months, and it's now broken through that 3% band. And if that trend continues, it's at 4% by the end of the year. That's problematic inflation. So it's a little bit like, ooh.
But they're notoriously sort of an efficient country, aren't they, generally? Like you look at, like the Toyota factory and whatever, they invented things like Agile and stuff. Like if you talk to them, like to the Japanese, to the BOJ, are they just saying, we're just smashing it, we're doing a great job, like we are exactly where we tried to get to?
Yeah. Well, at some extent, yeah, they might. The Japanese government might be happy to have inflation run a little higher. It's not really Japan's problem, though. It's and this is what Albert Edwards is saying. It's the rest of the world's problem, because Japan printed a whole heap of money, which then went into their system. Yeah, their local super funds and whatever did 2 things. One, they bought US stocks, so they've been big buyers of US stocks. And two, they've been big buyers of US Treasury. And so Edwards is saying, like, if they start trying to unwind their quantitative easing, and they've done no unwinding of quantitative easing, it's pretty close to peak. But like with inflation going through the top of the band, they're going to have to start unwinding quantitative easing. So that means pulling money back in from the system, which then means pulling money out of the US stock market and out of US Treasuries.
Do we have any concept or any estimation about how much went into the US stock market and US Treasuries? Like in terms of a percentage of like we've seen shares go gangbusters, right? Like shares are up through, the stocks are up, everything's looking good. You know, the Magnificent Seven's been on a tear, everything's going well. Like how much of that is due to Japanese kind of money printing? Do we have any sense?
I don't know, but I don't know. I don't even know quite how you would quantify it. But like Albert Edwards definitely believes it's one of the key factors driving the bubble in US equities, which he sees a bubble there. But and he reckons a big part of it comes down to Japanese buying. I don't know what numbers that's based on, but yeah, I can't tell you. It's a good question, but maybe I'll...
Thanks. I think we've all learned, Thomas, that by this stage in the podcast, if I've come up with a good question, then that's probably as much as we can hope for.
Yeah. All right. Next topic. He's saying it's a potentially scary story because they're going to start pulling money out of US equities at the same time as everyone is kind of pivoting away from the US stock market. And when they stop buying US Treasuries, that means the US government has to offer more return to entice buyers to buy Treasuries, which means higher yields.
Yeah.
Which then creates higher interest rates, which then creates reduced margins in US corporates, which reduces earnings, which then also has a negative implication for stock prices.
Right.
So it's all stock price negative is sort of what Edwards is saying.
Yeah. And what are you saying? Without an Australian financial services license.
Yeah, buy Bitcoin.
No, but I mean, is this guy just an alarmist kind of, you know?
I think Edwards is always interesting. No, he's good, and I think he's interesting because it's the worst case scenario.
Yeah,
and he's saying like people aren't paying enough attention to what's happening in Japan. Everyone's looking at treasuries and thinking that what's happening with treasuries is a debt story. It's a Trump uncertainty story. It's cutting the tax base, all of that sort of stuff, and the risks around the US outlook. But he's saying like even if none of that was happening, the simple fact that Japan is going to stop buying US treasuries because they're sucking money back into the central bank, that's going to drive yields higher. So, I mean, that is true. How big it is, we don't know. But it's interesting because I think that is the worst case scenario. And his view is that if we have a crash in 6 months' time, we're going to look back and be like, yep, it was the Japanese government ending quantitative easing that triggered it.
Michael dude who called the subprime
the big short.
Right? The big short, yeah.
Yeah, sort of. Yeah. It could be fine. It could just be, it's a risk. Yeah. But yeah, it'll be interesting to see how it's managed. Yeah, but like Japanese inflation is now one of the most interesting stories in the world right now. After being a nothing burger for 30 years.
I did not have Japan being the next Bond villain on my bingo card. That's 007 versus Godzilla. All right, Thomas, we finally got some interest rate relief. We got some cuts. The banks have passed on the cuts, but not necessarily. People haven't necessarily seen their interest payments going down. What's going on?
All the big banks announced that they were going to pass on the interest rate cut in full. But then I was reading somewhere in the AFR that only Westpac will automatically reduce customers' minimum repayments. At NAB, CBA and ANZ, you have to either visit a branch, ring the call centre, or go onto the app if you want to pay less.
That's fair.
Well, yeah, is it? I don't know.
I think so.
Right, okay.
Like, I guess for me, as interest rates went up, then you just learned to deal, right? Like you just had to cut back and you learned to get on and, swapped out your Bikram yoga for regular yoga. Just didn't realise you didn't need to sweat and stretch at the same time. Like I just kind of dealt with it, right? Made some cutbacks. And then I was like, then the interest rate comes in.
Oh, yeah.
And I'm like, well, what if I just don't change my repayments down just yet? If I just keep kind of living with that, with the cuts that I've made, then I pay my loan off quicker.
Yeah,
I'm happy with that.
Yeah, I mean, I think you're in the minority there. Oh no, that's true. No, you're in the majority, but only just. So NAB.
I just scraped it. You make it sound very personal. Well, you've just scraped into the majority. You've been allowed in at the last minute. They were almost full. And I created some extra places for you. Yeah.
So NAB did some customer research, and that showed that 58% preferred to maintain their repayments when rates went down. So 58%. But this is the thing for me. So that if 58% prefer to maintain it, that implies that 48% prefer to change their payments, presumably, right?
Or does it? Or they prefer not to think about their payments. It's a bit like when it goes up. Like, it's incumbent on you as the borrower to increase your payments, isn't it? Like, and because you might not want to do that either. Like, maybe you've got a bunch of you've been making extra payments.
No, it automatically goes up on the way up. That's the inconsistency here.
No, it doesn't. Does it?
Yeah. For sure.
I thought we had to. I had to keep adjusting it.
No, really?
When you set up we're just going to talk wildly from variance from bank to bank, I'm sure. But when you set up your loan, I think you can either set it up for automatic or like manual payments, right?
I didn't get that choice. I did not get that choice.
No, you went with the no frills option from Neobank in Mullum somewhere.
Aldi Mortgage.
Mortgage. No, I think that's right. I think we adjusted it the whole way up.
You had to do it manually. So what happens if you don't?
I don't know if we had to, but I remember checking and just being like, I'm going to...
What happens if you didn't?
Well, this is very personal circumstances, but we've always tried to make extra payments on the mortgage, like to pay a little bit more. And so over time, we've built up a bit of a buffer inside the mortgage. Yeah. So if the interest rates go up, I don't necessarily want to pay more straight away, right, out of the weekly thing. I might just go, I'm just going to let that ride for a little bit because we were ahead in our mortgage payments by that stage.
That's what I'm thinking. Like, surely, like the bank, if you don't have that equity buffer built up, but like, so, and then what happens? They deduct from your equity buffer to top up your weekly payment.
I don't know. It never happened because we upped the payment to meet the minimum.
Yeah. So I think you might be confused. You might be the 5% of customers that are confused. Yeah, you're back in the minority again.
It was fun while it lasted. It was nice. It's nice to be in the in crowd.
NAB's research shows that 58% prefer to maintain, which I'm assuming means 42% would prefer to change their payments.
Automatically.
Yeah, that's right. Not automatically, but if interest rates were lower, they would prefer to pay a lower repayment.
Yeah.
Rather than keep paying the old repayment. So 48%, 42% would prefer to change.
Yeah.
But because you have to call NAB or contact NAB to do it, only 3.8% of customers do. Right? So that's a big gap.
Yeah.
Close to 40% of customers prefer to change and then don't because for whatever reason. And that's another thing I'm confused about. They're just not, my bet is they don't realise that they have to.
Or they don't realise they can.
Or they don't realise they can.
Well, I don't know. I can only speculate as to why someone wouldn't do it.
Or they just don't get around to it. Or
no, there's huge portions of the population that think that it involves a trip to the branch, or to assume that it involves.
Well, that's the other thing the article said, that NAB's call centre was inundated with calls, and that call centre staff were apologising to people for the long wait lines. I don't know why the banks don't do it to themselves. Why the banks do it to themselves?
Yeah,
you're creating this thing.
There was a quote though in there that said one guy rang up to reduce his monthly repayments following an email. Gee, if only he had the internet where he got his email, he could have done it online.
I know. Right, they're inundated with calls like this. I just feel like the mortgage market's back in the 90s, like bizarre. And the other thing I don't understand,
couldn't get through to the bank manager because he was in a meeting,
got stuck with his repayments. But the other thing is, like, banks make money on the interest, right? So like when you get ahead of your payments, you pay less interest across the life of the loan.
Yeah,
which means the banks are making less money on your loan. So I don't know why the banks aren't automating this process.
Yeah, that's the bit that doesn't make sense to me either, when the banks are going, the banks are leaving just leaving money on the table.
Not like the banks to do that, is it?
It doesn't. Yeah, it doesn't correlate with taking money from dead people. Does not seem to align with their values to let people pay off their mortgage quicker. But maybe it's just small fry. Maybe they're like, it's fine. We'll catch it up when we sell them a new mortgage. Like we go, hey, did you realize you get $200,000 equity in your house now? Perhaps you'd like a massive new house.
Anyway, hit us up if you've got a theory about why banks don't do it. I'm curious.
But I think the key message here is check your mortgage repayments. Like understand what your minimum is and understand what you need to be paying and how much you are paying, because maybe there's some savings to be had or some disposable income to reclaim, and you can go on a bender. Not financial advice. All right, let's take a break here. We'll be back with more Comedian versus Economist after this, talking about a $32 billion company with no bosses, and we'll also summon the spirits of dead animals. Back with more CVE right after this. Welcome back here on Comedian versus Economist. Thomas, there's a Japanese company with no bosses. What's going on? How can it possibly operate?
Yeah, so this is Disco Corp. Great name.
Yeah, it is. Why would it be anything other than Disco Corp?
They're an 87-year-old company, so they were just ahead of the disco craze with the naming. I don't know why they make cutting discs, so I think that's the they make precision saws and cutting machines used in like semiconductors, and they help make semiconductors for Kawasaki pianos and things.
And other toys.
Yeah. So they got 7,000 employees, but since 2011, they've been doing this radical experiment where they're operating what they call quote, purely free market principles. So no one's got a boss. Superiors can't tell juniors what to do. Yeah. But they do have a currency system, an in-house currency system. They call
Disco Coin.
Disco Coin. Yeah. No, it's called Will. And I think they got the name from a computer game that the CEO was playing.
Oh, yeah.
Or something, because he wanted to gamify work is sort of the vibe. If someone wants you to do a task, if you need a task done, you create an auction for Will, and then people bid on the job, and whoever has the best bid gets the gig, and then they get rewarded with Will.
Does Will convert into currency? Like, can you can exchange Will for you exchange Will for dollars?
Yeah, for yen. Yeah, for yen. So every 3 months you get a bonus. So this isn't just your salary, but they get employees get a bonus every 3 months, and the size of their bonus is determined by how much Will they've accumulated.
Interesting.
Yeah.
Right.
Pretty radical. So so like the Will coins themselves generate from two places. One, it comes from a sale. So for every billion yen of sales, they get 400 million Will is created. And then it comes from the sales staff. So the sales staff then feed Will back down the system.
Right.
So the sales staff pay the marketing team, and the marketing team pays the engineers and so on.
I'm going to try it with my kids, I think.
Well, yeah. That's what they said. A lot of employees are now doing it at home with their family.
I'm not sure we can call it will, because like getting my kids to do any job is often, it's very much against their will. And but I like the model.
Yeah.
So everyone's on a salary though. To begin with.
Yeah.
Like, what if you just don't pick up any jobs? You can just be like, nah, I'm good with the base salary. Like, no one's going to tell me off.
You start with negative Will. So every month, they assume just being there is costing the company money. So you start with negative Will. So you got to
take a banana from the company fruit bowl. That's minus some Will.
Yeah, if you go out for a cigarette break, you get a negative Will count.
Really?
Yeah. They got because there's rewards and fines. Over 350 rewards and fines.
It's like working in Mario World.
Yeah. Ding, ding.
There's wheels and fines and magic turtles.
Yeah. Well, there's the horsey of shame as well. If you're the worst performing unit in the company, you get a little knee-high soft toy horse parked outside your door.
Right. Oh, is that all? I thought you had to like ride this horse around in the company courtyard, parade around with a loser written on your back or something.
Yeah.
Well, it obviously works because it's a $32 billion company.
Yeah, it's working for these guys.
Feels like they're the only ones doing it. Or is anyone else doing it?
They are the only ones doing it. They've had like Sony and a whole bunch of other companies have gone and checked it out, but no one's not taken it on.
Very difficult transition, I feel. Like if you're a Sony with, the executive suite down to, whoever's putting Discmans in boxes, like I feel like that's a tough transition to make into a free market model.
Yeah. The CEO Kazuma Sekiya, his thought on why no one else had taken it on, and I don't understand this, maybe you understand this. He said, yes, they're afraid of challenging the status quo. Nobody wants to be Gorbachev. He said, he changed the Soviet Union system from socialism to the free market economy, but the change created Putin. I don't know what that...
Yeah, it's a long bow to draw, I guess.
I don't know what that means in the context of a precision tools manufacturer. But
I think he was referring to riding around on a horse, actually, with his shirt off.
It's the horse of glory. Yeah, so I don't know. Yeah, but it's working for them. He reckons that he's saying like humans are motivated by two types of motivation, internal and external motivation. So internal is when you want to do something. External is when you feel you have to do something. Yeah, he says when you start dating, you want to go for dinner. When you're married, you have to.
Right. So not only am I going to use will at home with my kids, I'm also going to use it with my wife. And when I make her go to dinner with me, she will earn will.
Well, yeah. Which you can then cash in for chores. So there's a couple of problems, but one of them is that some of the employees are complaining about monopolies coming within the system. So the HR department's got a monopoly on setting paychecks and doing things. So they just charge ridiculous amounts to do stuff.
Oh, right. Well, yeah, because qualifications come into it, right? Like someone's like, hey, we need someone to build a rocket. like the janitor is just like, I'll do it. All right, Thomas, finally on the show, animal souls. We got some data on the souls of of man's best friends.
Yeah, friends, yes. Yeah, so a survey asking people, do you think animals can have spirits or spiritual energies?
Is this another Gallup poll?
Yeah.
Are they back with another cracker question? Who's asking this question?
This is the Pew Research Centre.
Oh, yeah.
They're up there with Gallup.
So do animals have souls?
Yeah, majority of the world think so. So the 35-country median is 62%. 62% of people think yes.
Good to know. I'll file that under totally useless information.
Yeah.
But I presume this correlates pretty strongly with religious countries and people having strong religious beliefs.
I think so. So India's number one at 83% of people agree with that. And that makes sense, like cows are sacred. And Greece is at 82%, predominantly Christian country. Turkey is at 81%, which is a Muslim country.
Greece is also predominantly big meat eaters as well. Like if you go to a Greek restaurant, it's all just lamb and chicken. It's like, I'm not getting the vibe that they're thinking a lot about the souls of animals at a Greek restaurant.
Yeah, but it's interesting. So India's at 83%, but then Bangladesh is at the bottom with 40%.
All right.
And Bangladesh is a predominantly Muslim country. So I thought maybe that. But then Turkey is number 3 at 81%, and they're predominantly Muslim. So
right.
Maybe it's more of a cultural thing than a religious thing. Australia at 57%, majority of Aussies.
So it's very high still. 57% of people that think animals have souls.
Souls. You're in the minority again, aren't you?
I think I am. I love. We've just got a new dog actually because we lost our old dog, Mr. Tucky. Rest in peace. Shout out to you up there. I'm sure you're looking down on us. So we have a new dog now, Captain Montgomery. But I don't know. They're very similar dogs. I'm not sure that they have different
unique
souls already. I don't know. They're both beautiful animals and I love them. But what does it matter anyway? Does it matter?
No, I just think it's interesting. Interesting in terms of like animal rights and, the movement towards, like free range chickens and these sorts of things. Like,
try and be kinder to animals, you mean? Like maybe we're inclined to be kinder to them if we think that they do have a soul, or some sort of.
Yeah.
But there's a very different. Like I'm kind to animals because they're just gentle creatures normally, not because I think they have a soul, but because I think they feel pain and they feel emotions and all that sort of stuff. It's not a spiritual thing. But it is times like this, Thomas, that I seek some spiritual guidance. So I headed to the internet and I went to Catholic.org. Oh. Fortunately, they have a Q&A section on their website that answers this question directly. And the question is, do animals have souls like human beings? And I was like, perfect. Answer, animals have souls and so do plants. Does this answer sound like something out of the New Age movement? Don't worry, it isn't. Rest assured, we're not saying animals and plants have souls like ours. The soul is the principle of life. Since animals and plants are living things, they have souls, but not in the sense which human beings have souls. Our souls are rational. Theirs aren't. Oh. And ours are rational because they're spiritual, not material. It's all very, I think, self-explanatory. Just in case you were still confused, animals and plants also lack moral sense. So think about a carrot, Thomas. It's not thinking about whether growing is right or wrong. It's just growing because it's what it was made to do. So they lack a moral. They say even dogs lack a moral compass. So when you scold Spot for chewing the carpet and tell him what he did was wrong, you aren't assigning guilt out of sin to him since he can't commit a sin. So it's not possible because he doesn't have a soul, he can't commit a sin. So animal and vegetable souls are dependent entirely on matter for their operation and being. They cease to exist at death. There's no doggy heaven. Sorry for anyone. That comes from the FAQ.
I feel like it needs a trigger warning. You just drop that in there. I'm thinking about carrots and suddenly...
It's in brackets.
In brackets. There's kids reading this as just thinking about carrots and oh, God.
Yeah. And then there's a link at the bottom to donate $5 if you like the content. So classic Catholic Church, never miss an opportunity to pass the plate around. Right after they drop the no doggy heaven bombshell. But also, if you'd like to give us $5, we can pass that on to our Lord and Saviour. I think that does it for this week. Thank you so much for tuning in. Thomas, you're away next week, but we are going to record a super special episode for next time. So make sure you tune in for that. Until next time on Comedian versus Economist, from Thomas and myself, it is bye for now.
Comedian vs. Economist is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Comedian vs. Economist are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Comedian vs. Economist acknowledge the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people today.